Hello, everyone. A huge, warm welcome to you all. Thank you so much for clicking on this video and for joining us today.
It's great to be here.
We are absolutely thrilled to have you because, honestly, we have a massive topic to cover today. We are looking at a moment in tech that, it might just redefine everything.
We really are. And, massive might actually be an understatement for what we're about to get into.
You are not kidding. We're breaking down Alphabet's Q4 2025 earnings call, which just happened a couple of days ago. And the numbers, they're astronomical.
Yeah.
We're talking about a company that has just crossed $400 billion in annual revenue for the first time ever.
It's a staggering milestone.
Mm.
But what I find even more compelling, beyond the raw revenue, is the narrative shift. This call wasn't just a victory lap for 2025.
Yeah.
It was the official opening ceremony for what they're calling the Gemini 3 era.
I saw that phrase pop up. It really feels like they're planting a flag.
They are. The whole strategy has pivoted, and pivoted aggressively, toward what they call agentic AI and infrastructure.
Right.
They're basically telling the market, look, we are moving past chatbots that just talk to you and into an era of software that actually does things for you. And the price tag for building that future,
Oh, yeah.
it is absolutely eye-watering.
Oh, we are definitely going to get to that price tag. It's the number everyone is whispering about. But before we get to the future, let's ground ourselves in the present. Let's unpack the financial headlines from the CEO, Sundar Pichai, and the CFO, Anat Ashkenazi.
Okay, so looking at the Q4 snapshot, consolidated revenue hit $113.8 billion. That is up 18%.
18%, wow.
And like you said, that pushed the full year 2025 revenue to $403 billion.
And looking at where that money's coming from, there was one clear star of the show this quarter.
Google Cloud, without a doubt. Cloud revenue grew 48% to $17.7 billion for the quarter.
48%.
To put that in perspective, the cloud business is now on a $70 billion annual run rate.
That is just wild. I remember when people were questioning if Google could ever really catch up in cloud, and now they're just sprinting.
Exactly. They are the arms dealer for the AI revolution.
So what about the old reliable? What about search?
Still the cash cow, and frankly, surprisingly resilient. Search revenue grew 17%.
Okay.
There has been so much fear that AI would kill traditional search, but, the numbers just aren't showing that yet.
And YouTube had a big milestone too, didn't it?
They did. Annual revenues for YouTube surpassed $60 billion. That's combining ads and subscriptions.
Okay.
Although, interestingly, the ad growth was a bit softer than some expected, but subscriptions like YouTube TV and Premium are just booming.
And we can't ignore the robot taxis. Waymo seems to be hitting its stride.
Finally, yes, Waymo just raised a massive new investment round. They're now doing over 400,000 paid rides a week and have surpassed 20 million fully autonomous trips. So yeah, it's no longer a science project. It's a real business.
Okay, so the business is printing money. But here's where it gets really interesting. The guidance for 2026. You mentioned the price tag for the future. Lay it on us.
This is the jaw dropper. For 2026, Alphabet anticipates capital expenditures CapEx to be between $175 billion and $185 billion.
Oh, sorry, did you say billion with a B?
With a B, $185 billion in 1 year. To give you some context, that's more than the GDP of a country like Ukraine or Kuwait.
That's unbelievable. What are they buying with that much money? Is it all just gold-plated servers?
It's mostly servers and concrete, yeah. They're buying the absolute cutting edge of compute. This includes their own custom chips, their TPUs like Trillium and Ironwood, and they confirmed they'll be among the first to get NVIDIA's new Vera Rubin GPUs.
So they are trying to corner the market on computing power.
Precisely. It is an infrastructure arms race. And, alongside that hardware, they highlighted product momentum. They launched Gemini 3, and the Gemini app, get this, now has 750 million monthly active users.
750 million, that is a serious user base.
It is. And the key terminology they kept using was agentic. They're moving from chatbots to agents. They introduced something called the Universal Commerce Protocol, which is all about letting AI agents plan and execute shopping tasks for you.
Which sounds incredibly convenient and maybe a little expensive for my wallet if my AI starts shopping for me.
Well, we'll have to see about that.
Okay, that was the prepared remarks. But as we know, the real spice usually comes out during the Q&A. This is where the Wall Street analysts, they try to press management on the hard questions.
And they certainly tried this quarter.
Let's dive into that. The first question came from Brian Nowak at Morgan Stanley.
Right, and Brian went straight for the shiny new object, agentic commerce. He wanted to know about the progress in 2025 and, what's coming in 2026.
And he also asked about Genie, right? The world-building AI.
He did, inside YouTube.
Yeah.
And Sundar's response, well, he positioned 2025 as the year of laying the foundation. He pointed to that universal commerce protocol. The idea is to create a standard so agents can actually talk to each other and complete transactions.
So 2025 was building the plumbing, and 2026 is turning on the tap.
That's a great way to put it. And on the Genie question, Sundar sounded genuinely excited. He said he was blown away by it. He sees YouTube as the natural home for creators to build these, interactive worlds and express their creativity.
Next up, we had Eric Sheridan from Goldman Sachs. He asked the question that I think is on every investor's mind about that $185 billion spend.
Yes, he addressed the imbalance between AI demand and capacity. He basically asked, you're spending all this money, how do you close the gap? And he also asked about efficiency.
And the response from Sundar and the CFO, Anit, had a fascinating nugget in it about coding.
This was probably the most quoted stat of the entire call. Sundar confirmed, first, that they are still supply constrained. They literally cannot build data centers fast enough.
Wow.
But on the efficiency side, he dropped a bombshell. 50% of Google's code is now written by coding agents.
Wait, half of Google's code is written by AI?
Yes. Reviewed by human engineers, of course, but half the volume is generated by AI. It's a massive productivity booster. It explains how they're keeping headcount pretty stable while launching all this stuff.
That is wild. Talk about eating your own dog food. Okay, moving on. Doug Anna from JP Morgan was up next.
Doug asked about the competitive landscape. He used the term leapfrogging, with so many new models, how does Google stay on top? And he also asked a strategic question. Will Google ever sell their custom TPU chips to other companies?
It's a valid question. It feels like every week there's a new fastest model in the world.
Right. And Sundar's view is that the innovation cadence is relentless, but they're confident because they're improving across the whole stack. As for the TPUs, he didn't commit to selling the chips externally. He emphasized that TPUs are a key differentiator for Google Cloud customers.
So if you want the best Google chips, you have to use Google Cloud.
That's the message. Keep the secret sauce in the house.
Makes sense. Next, we had Mark Mahaney from Evercore. He had a two-part question that touched on some market fears.
Right. First, why was YouTube ad growth only 9% when search was up 17%? And second, the DeepSeek moment, this fear that AI is going to destroy the pricing power of SaaS companies.
Yeah, the idea that if AI can write code, why pay for expensive software? What do they say?
On YouTube, Philip Schindler explained it was a tough comparison. Q4 2024 had huge U.S. election spending, which didn't repeat. Plus, users are shifting to subscriptions, which helps the bottom line, but not the ad revenue specific metric.
Okay, that makes sense. And on the SaaS death spiral theory,
Sundar pushed back hard on that. He argued AI is an enabler, not a destroyer. He pointed out that top SaaS companies, he named Salesforce and Shopify, are heavily using Gemini to improve their products.
so it makes their software better, not obsolete.
That's the argument. Yep.
That's a relief for the software industry, I'm sure. Then we had Mark Smolik from AllianceBernstein. He asked about their investment framework, but then he asked a great personal one. What keeps management up at night?
I love when analysts ask that. It cuts through the corporate speak. Anit handled the investment part, but Sundar's answer to the nightmare question was very telling.
So what is keeping the CEO of Alphabet awake?
Compute capacity constraints. It wasn't competition, it wasn't regulation, it's physics and logistics.
Really?
He said power, land, and supply chains are the bottleneck. The challenge is just ramping up fast enough to meet what he called extraordinary demand. He's worried they literally can't plug the machines in fast enough.
That really underscores why they're spending $185 billion. They're trying to buy their way out of that bottleneck. Next up was Michael Nathanson from MoffettNathanson.
Michael wanted more detail on that universal commerce protocol, and he wanted a breakdown of that massive CapEx spend. How much is buildings versus computers?
And we got a clear answer on the money split, didn't we?
We did. They confirmed roughly 60% of that spend goes to servers, the machines and chips, and 40% goes to the data centers and networking gear.
Okay. And on the commerce protocol?
Sundar explained it's about creating a standard. So an AI agent can actually complete a transaction for a user, but it also allows merchants to showcase promotions. It's about building the highway for AI commerce.
Got it. Okay, Ross Sandler from Barclays was next. He focused on that 750 million monthly active user number for Gemini.
Right. And Ross asked a tough question. Is that the right metric? How does it compare to competitors? And what about retention?
Because it's easy to get people to try an app once.
But harder to keep them. Exactly. Sundar said Q4 saw extraordinary growth. But crucially, he said engagement intensity increased sharply. So people aren't just opening it, they're using it more and for longer.
Then we had Ken Goralski from Wells Fargo. He asked about money again. Specifically, how do you monetize this new world?
He asked about conversational search. If I'm just chatting with an AI, I'm not clicking blue links, so how does Google make money? And he also asked about the Apple partnership.
That Apple deal is huge. What did they reveal?
Philip Schindler said revenue acceleration in search came from retail, finance, and health. And they're testing agentic actions in ads, like having AI generate campaigns.
Then on Apple.
They confirmed they are Apple's preferred cloud provider. And this is key. They are helping develop Apple's foundation models. So Google is essentially the back end for Apple Intelligence.
That is a very cozy relationship. Finally, the last question came from Justin Post at Bank of America.
Justin asked the classic innovator's dilemma question. Is the Gemini app cannibalizing Google search?
The fear that they're eating their own lunch.
And Sundar was very firm on this. He said there is no evidence of cannibalization. He called it an expansionary moment. His argument is that people are conducting new types of queries they wouldn't have done before. The pie is getting bigger, not just sliced differently.
So, expanding the pie, that brings us to the end of the Q&A. It was a dense call. If we step back, what are the big takeaways from this whole thing?
You know, if we look at the big picture, I really see 4 main themes emerging from this analysis.
Let's hear them.
Theme number 1 is the infrastructure arms race. You just cannot ignore that $175 to $185 billion CapEx guide.
Right.
Google is betting the house on having the most compute power in the world. They believe the winner of the AI era is the one with the biggest brain.
It is a high-stakes poker game, and they just pushed all their chips in. What's theme 2?
Theme 2 is the shift to agents. We heard it over and over. Universal Commerce Protocol, coding agents, agentic AI. We're moving past the novelty phase of just chatting with a bot. Google is positioning itself for a world where AI performs labor. Coding, shopping, planning. That's a fundamental shift.
Theme.
Cloud acceleration. I mean, 48% growth is monstrous for a business that size. It proves enterprise demand for AI isn't hype. It's converting to actual revenue right now.
And the final theme.
Resilient core. Despite all the predictions, search grew 17%. It really debunked the fear that AI would kill the traditional search business overnight.
Not yet, at least.
For now, they've managed to integrate AI without destroying their golden goose.
It is just incredible to look at the sheer scale of these numbers. $400 billion in annual revenue, 20 million autonomous Waymo trips. It really feels like we're watching a Titan evolve in real time.
Absolutely. They are changing the engines on the plane while flying it at supersonic speeds.
Right.
It's risky. It's incredibly expensive. But based on this quarter, it seems to be working.
Well, that is all we have time for today. Thank you so much for watching this breakdown. We know earnings calls can be dry, but the implications of this one are going to affect everyone.
Indeed. It's a fascinating time to be watching this space.
If you found this breakdown helpful, please click the like button. It really helps us out. Share this video with anyone who needs to understand where the tech world is heading. And don't forget to subscribe to stay tuned for our upcoming content. We'll see you in the next one.